What are the pros and cons of a VA loan? Hey, what's up, everybody? It's Jeff Javarthan, Jeff the Mortgage Pro. Thanks so much for watching my show. I really appreciate it. If you like this video, please make sure you click that like button down below. And if you want to subscribe to my channel, I'd really love to have you as a subscriber. I'm trying to grow that list and trying to be the #1 loan officer on YouTube. I think it's going to take a long ways to go and a lot of videos because there's a lot of great people out there putting out a lot of great content. But thank you so much for clicking on my video and watching my video and subscribing to my channel. I really appreciate that. But today what we're talking about are the pros and the cons of a VA loan. And what I think you're going to find is that there's not a lot of drawbacks, not a lot of cons for VA loans, but we'll talk about one or two here. So let's talk about the pros of a VA loan first. So, one thing I always want to make sure that we know is that like VA loans are not bad loans. They're not for, people who just don't have any money or anything like that. You have earned the right to get a VA loan if you serve the military and you come out with honorable discharge, or if you're currently in the military right now. You have earned that right to be able to have a VA loan. So don't ever think that this is a bad mortgage by any means or any stretch of the imagination. This is a good product for good people. And I love doing VA loans for just about anybody that is well, I love doing VA loans, period. It doesn't matter who you are. Okay. If you can qualify for a VA loan, I want to help you out. So let's look at the pros of a VA loan first. One of the things that I love about this is it's 100% financing with no limit on the size of the loan. Okay, this is the only loan out there that allows you to qualify for 100% financing. Yes, there is another loan called USDA loans. It's another government loan that allows you to do 100% financing, but there's definitely way more restrictions on that, especially in terms of geography, than there are on VA loans. You can get a VA loan anywhere in the United States, and you can use 100% financing to buy your next property when you're using the VA benefit. So 100% financing, definitely a pro. Okay. Pro number 2 is that there is no mortgage insurance that is to be used on a VA loan. So we have something called a funding fee that we use on a VA loan. That's what helped keep the program going forward. But there is no mortgage insurance. So on any loan that you can think of, if the financing is over 80% of what the mortgage or the purchase price is, you're going to have mortgage insurance on there. Whether it's a FHA loan or if it's a conventional loan or a jumbo loan, those are all going to come with mortgage insurance. But VA loans, they don't have mortgage insurance. They go up to 100% financing with no mortgage insurance, which I love about that. So number 2 benefit, no mortgage insurance on a VA loan. Benefit number 3, the benefit never expires. It never goes away. So as long as you are alive, you can use this program. You can use it more than once. You can use it as many times as you like. That's benefit number 4. You can use it as many times as you want, and you still get to use it over and over again. Another benefit is that you can use this on cash out refinances all the way up to 90% loan to value. In most other loans, like FHA loans, will only go up to 85%, more like 80%, is a better gauge for FHA loans. Conventional loans, you can go up to 80% traditionally for cash out mortgages. Jumbo loans, 75%. So this is the highest amount of money you could get out if you're going to use your VA loan for a cash out refinance. Now, some states don't allow for VA cash outs. Make sure you check with your mortgage advisor on which states those are. Texas comes to mind as one you can't do a VA cash out loan on, but there's situations and solutions around that. So make sure you reach out to the right person when you're talking about cash out refinances of VA loans. You can definitely do what's called a VA IRRL, a VA interest rate reduction loan on this. And since you already have a VA loan going forward, you're going to do a VA IRRL. If interest rates drop, then you're going to be able to use this particular product, the VA IRRL product, to get another VA loan that replaces your existing VA loan at a lower interest rate. And the benefit of this is that there's a lot less paperwork that's involved. Let's say if you were doing a conventional refinance, rate and term refinance, you would have a lot more paperwork. You have to document everything again. With a VA loan, you don't have to document nearly as much stuff when you're doing a VA IRRL. So another benefit for a VA loan. You can have lower credit scores to qualify. So believe it or not, the VA does not have a minimum credit score that allows you to qualify for a VA loan. The only thing that the only people that usually set a bottom for VA credit scores are lenders. So I've seen them as low, for the most part, the people that I work with right now, we can go down to 580 score for a VA loan, but some lenders go down to 500. I don't think I've ever seen anything below that somebody qualified for a mortgage for, but there's no credit score requirements to help you qualify for a VA loan. You can qualify just as as good as you can with the 580 credit score as you can with a 620 credit score. Okay. And then lower rates on the VA loan. So since this is a benefit to you, the benefit to the veteran, these are always going to have lower than what I would say market rates. So if you have a conventional loan and then a VA loan side by side, the VA loan is always going to have a lower interest rate for the most part than a conventional loan is going to have. So you're going to have lower rates with VA loans. It's another pro that we're going to have. And then lastly, if you have a service-connected disability of at least 10%, there is no funding fee. So you don't even have to pay the funding fee if you have a service-connected disability of at least 10%, which is crazy. That could save you a lot of money when you're doing this. But again, the benefit is that you've earned this right to use a VA loan, and you should be able to have a VA loan going forward. So let's definitely put that in the pro column. Okay, let's talk about a couple cons, I could say, if you would actually even call them that. The first one is a VA funding fee. So this is just the cost that you have to pay to help keep the program going forward. So unless you have the service-connected disability, you have to pay for the funding fee. It can be upwards of 2.5% in some instances, even higher in some other instances. But for the most part, that money, again, is going directly to keep the VA program going. So you have to get use a VA fund. There's a VA funding fee every time you buy a new house, and there's also one if you refinance an existing house, whether it's a cash out or a VA early, you're gonna have to pay that if you don't qualify for the disability. So that's definitely a con, I would say, but it's not that bad of a con. Considering all the other flexibility that you have with it, right? There's less flexibility in certain states where termites are required. So this cannot be waived in a lot of instances. So many of the southern states on the southern half of the United States are going to require a termite report. And then usually you're going to have the Section 1 stuff cleared up or cleared before you can actually close on your VA loan. So if you have a property that's really, really bad, it has a lot of termite damage, it may not be the right property to buy with a VA loan just because it's going to be a lot of work. Now you can pay for it or the seller can pay for it. I would always recommend that the seller pay for those types of repairs going forward if they can, but at the same time, they may not want to do that. So that could be a drawback of a VA loan. And then the last, I guess if we'll call this a con, is that you can't buy an investment property or a vacation property with a VA loan. So you can use your VA loan to buy a property and then move and leave that VA loan in place on that existing property. If you wanted to rent it out going forward, you could totally do that, but you can't buy as if you were going to have a second home with a VA loan or buy it as a investment property with a VA loan. With the exception of multifamily properties, if you're going to live in one of the units, you can use your VA loan to buy a multi-unit property and you can rent the other units out, but you can't just buy it as if it's a straight investment property and you're not going to live in one of those units. Okay, so 3 kind of cons, I guess, that are associated with the VA loan. If you guys have any questions at all about VA loans, I'd love to be the one that helps you out. Thank you so much for watching my video. Thank you for liking this channel. If you have any questions at all, I'll put my calendar down below and you guys can schedule a call with me and we can talk more about the pros and the cons of VA loans or any other loans that you're working on right now to either try to get into a house or refinance. I'd love to be the one that helps you out. Have a great day. We'll talk to you soon and see you on the next show.